Hello and welcome to the June 2020 Capstone Fund 5 Collections Report and Newsletter. So for the June collections period, we got out to our investors 10.43%, which is back up over double digits again from the previous few months back in the coronavirus scare, and about 0.25% higher than last month. So we're really happy with that. We're still maintaining about a $5.25 million balance in Fund 5, fairly stagnant there. We're still looking to get some new investors in or increase investments to gain a little more inertia for the benefit of everybody. In terms of payoffs and new fundings, we did have a couple payoffs into Fund 5, which is great. Houses moving and selling, that kind of thing. And we funded a few new loans. Nothing extravagant, nothing too exciting, just base hits like we always like to have in Fund 5. So typical consistency of revenue in Fund 5 in terms of funding new loans, payoffs, and collections. No significant uptick in foreclosure or late pay activity. We did get one payoff in June that was a very large payoff of a defaulted loan that got us caught up on some late fees and some back interest. So that was good to have, and nice work on our loan servicing side. For a little news, home sales in June were actually up 21% over the previous month. Now that is after 3 months of fairly declining numbers due to coronavirus, but 21% is actually the largest single month jump since the National Association of Realtors started recording those statistics way back in 1968. So it's very good news for the housing market. More buyers are entering the market still after more people are getting back, returning to work and whatnot. We are seeing some of that pent-up demand as a result from the 3 months of a little bit slowdown in home sales. So that pent-up demand that people were talking about 3 and 4 months ago start to come out now and really help us. Another piece of somewhat interesting national news is the actual median price of houses is starting to rise a little bit. By a little bit, I mean significant enough to mention. And we're thinking that this is, according to a couple news articles and whatnot, and again, some national data that we get from the Association of Realtors, part of it is because some of the higher end homes are getting back on the market and starting to move a little bit. People are starting to purchase those move up homes, and some of that luxury market type transaction activity is starting to uptick. So that's affecting the median home price as well. And it's a good thing to see as numbers continue to improve over the last month. So that's pretty much it. We're here in beautiful Grapeview, Stretch Island, Washington this month for a couple weeks, just working remotely and visiting some family. And I hope you guys are doing the same and having a good summer. And we'll talk to you next month.